Hello everyone, hope you're doing alright. Welcome back. This is the third video, and this video we are going to touch on breaker blocks. Breaker blocks are often confused with mitigation blocks. Last episode we talked about mitigation blocks and the type of pattern the mitigation block has. Now, the mitigation block has a swing failure pattern. Now, the breaker block, as I've mentioned in the last episode as well, has a breaker pattern. Obviously, it's already in the name, breaker pattern and swing failure pattern. So swing failure pattern is for the mitigation block and the breaker pattern is for the breaker block. So if we take our line tool right here, let's say we have an up move right here. We have a down move. Then we have another up move, takes out this high. Then we have another down move, takes out this low. So the high and low gets taken. Then we move back into the low of this bearish breaker block. And then we continue lower. That's a breaker pattern. And of course, this is a bearish breaker pattern. So the important thing for us to understand is we are taking a swing high. Again, if you don't know what a swing high is yet, we'll touch on it later. We are taking a swing high and we are taking a swing low. And then we move back into that range. This down candle, if it's a bearish break block, we use the down candle and then we drop lower. Now, if we want to draw a bullish breaker block, it would look something like this. So we have our low, we create some sort of swing high, we take out the swing low, we move back above the swing high, the high right here, the up candle gets traded back into, and then we continue higher. That's a breaker block. Now, can you see the difference between a breaker block and a mitigation block? The mitigation block would be somewhere around here, because that's your swing failure pattern. First breaker, then after we might get a swing failure pattern. And the logic behind a breaker block is pretty similar to a mitigation block. If we are coming down right here and there are people buying this leg up, so once we drop down below this low, people who bought here get a chance to mitigate those orders. So they get a chance to release themselves. Price is offering fair value. After they had a chance to mitigate those orders, price will drop off again. Now let's dive into a chart and give you some real-time examples as well. All right, so the first example right here is a bearish example. We were coming off of some sort of weekly premium array. Now I'm going to basically emphasize more on confirming a higher time frame premium and discount arrays. Because a mitigation block, an order block, a breaker block, every PD array is useless if you don't have a higher time frame narrative, a higher time frame bias. So we need to have a higher time frame PD array. And then in the lower time frame, because the same stuff happens on the lower time frame. On the lower time frame, we can confirm that PD array with another breaker block, a mitigation block, an order block, etc. So weekly premium array, right here we are on the 1 hour time frame, and you can see the pattern right here. We are dropping lower, creating this swing high. Right here, a swing low. We take the swing high, immediately drop down below, and we take this swing low as well. Then this right here, this wick that's overlapping with the fair value gap, this down candle becomes our bearish breaker block. Now, the entire breaker block is the consecutive down candles. So this is your entire breaker block. Just like an order block, it's the consecutive down candles. For mean threshold, it would be this right here, the bodies of the candles, and these ideally shouldn't get disrespected. Now there's a thing with mean threshold, and I get this question very often. Mean threshold, if it gets disrespected like this, just a little close above, this doesn't mean that the whole idea of this breaker is invalidated. The 50%, the mean threshold, is just an early indication. That's all it is. But the bearish arguments here are still stronger than the bullish arguments. So there's no reason here to think if price closes just a little bit above it, that the whole idea is invalidated. That wouldn't make sense. So remember that. It's not something set in stone. It's just an early indication. Now we have the pattern, obviously. We have this breaker pattern. We take the low right here because it's a bearish breaker block. And then next step is something overlapping. So as you can see, there is a fair value gap overlapping. Now this is often referred to as a unicorn setup. A unicorn setup is a breaker and a fair value gap overlapping with each other. So at this low, there's a fair value gap overlapping with the breaker. That makes it even stronger. Just like we talked about in the previous episode. If there is another PD array overlapping with another PD array, or there's something nested inside of here, so here might be a very low time frame order block, then that makes the PD array even stronger. Because then you have multiple confluences instead of having one. And then you can see we move away eventually. Now what happens here? This is a mitigation block. Swing failure pattern. It's coming back to this low. This wick is overlapping with a volume imbalance. I would count that as a fair value gap. Of course, do your own testing, see what you prefer. And then after touching this mitigation block, it drops off again. This is your swing failure pattern. So we had our breaker pattern right here. And then here we have our swing failure. And this creates a mitigation block. Now again, remember the steps. And again, a breaker block is strong, especially with an overlapping fair value gap, if your bias is correct. So if you know where price is trading to, obviously everything will be strong if we know where it trades to. But without a higher time frame context behind anything, you can have 100 1-minute time frame breaker blocks, but they will not be strong. If there is no context, there's no narrative, there's no higher time frame bias. That's very important for you to understand. And that's where a lot of people struggle with, and that's relatable as well, because I've been there as well in the beginning. You're just trading the 1 minute and you're trading every breaker block you see without any higher time frame context whatsoever, and you just get blindsided and you're thinking, why isn't it working? Well, maybe you're not even looking at the higher time frame. If we know the orders are on the higher time frame, why do we ignore the higher time frame? That's stupid. All right, so let's move on to the next example. Right here, we can take a look at the monthly actually. And if we take a look at the monthly right here, we can see we are coming off of this monthly order block. If we then drop down into the 4 hour, so that's already our context, that monthly order block. That's interesting to see. See how price is all fractal? It's all fractal. So first we have some kind of move right here, but let's just ignore this bit right here and let's move on to this. Can you spot the breaker? This last up move, we create a swing high and we take out this swing low. We wick below it. We have an immediate displacement higher, taking out the swing high right here. Then this right here, this little body, the up candle, is our breaker. The wick isn't overlapping. The top of the wick isn't overlapping with any of your value gaps. So we take the body. Right here, we trade back into it and we displace again. So we have our pattern, we take the high, and what do we have? An overlapping fair value gap, making it even stronger. And we have our bias already based off of the monthly. So we have a monthly bias, our 4 hour aligns with that bias. We have a breaker block right there. Then if we drop into the lower time frame right in this section, we can see the exact same thing. It's all fractal. So if we take a look at this right here, this is our 4 hour breaker coming into a monthly order block, 4 hour breaker. What are we seeing right here? We're coming into this breaker, 4 hour breaker on the 5 minute time frame. We're moving higher. This high fails to take out this low. What is this high? After we take out this high, right here, this high is now not a breaker, a mitigation block. This is your swing failure pattern. Breaker pattern, swing failure pattern. These are the only two patterns that are in the market that will tell if the market is reversing or not. It's either a swing failure pattern or a breaker pattern. These are the only patterns. So let me write that down for you. So it's either a swing failure pattern, a mitigation block, or a breaker pattern, a breaker block. That's all you need to know on how to spot when a market is reversing. These two patterns are the only reversal patterns. So right here, this is a swing failure pattern. What is overlapping with this mitigation block? We have this gap, this volume imbalance. Below it is a little fair value gap. And you can see we are pushing higher after that. See how this video already gave a lot of information. And the breaker is not that difficult to spot. Just train your eyes to see it and see it. Having it in the right context, that's important. See how we just had this order block? We only knew about order block, breaker block, mitigation block, and we just had a trade opportunity right here. Only by knowing order block, mitigation block, breaker block. The only three things we talked about so far. And we just had a trade opportunity right here. See what I'm saying? You don't need a lot to be profitable here. The order block, mitigation block, breaker block already gave your bias. You don't need to know a lot to be profitable. Now, last example right here. We're coming off of this previous order block like we talked about. It's overlapping with a mitigation block. And right here, we are taking this swing high. So we have the pattern. We have a swing low, swing high. We take the swing low, take the swing high, bullish breaker. As soon as we take, so we don't need to close above it. Of course, that's a nice confluence to have. As soon as we wick above this high, this breaker block gets confirmed. So we can already expect higher prices as soon as we trade back into it. Here we can already expect higher prices. So pattern, high, overlapping, fair value gap. See how we sting into the fair value gap? Right there. And push higher. Can you see how these three PD arrays, the order block, mitigation block, breaker block, already give you so much context? Alright, now for you, please go ahead and study the breaker block. See how order block, mitigation block, and breaker blocks already give a lot of context, already can give you your bias. And then I'll see you in the next video on Friday. Alright, thank you.